Morning, everybody. Welcome to the early morning session here. Whip or get whipped. So hopefully nobody got whipped last night. So we can, we'll talk about work in progress this morning. So thanks for everybody coming this morning. One quick administrative note here: the code word, the secret word of the day for this session is eagle. I'll try to remember to repeat that again at the end of the session. But eagle is the code word for today. Eagle. Eagle, like the flying bird. So, all right, we're going to talk about one of my favorite topics this morning, and that's the work in progress and the timeliness of it, the importance of it to a contractor. One of the reasons that I think it is my favorite topic is I used to be in construction before I came to ComputerEase. I'm now with ComputerEase Software. We specialize in construction accounting software for contractors. But prior to that, I ran a large mechanical contractor, ran the accounting department for a large mechanical contractor. And if I only knew then what I know now about the work in progress, I would have done a much better job. I think I did a pretty fair job, but I know what it's like to be on the construction side and get into the detail of the day-to-day running of your business and kind of lose sight as a contractor on some of the important things and not using that work in progress to help me run the business. And like I said, I think the reason it's one of my favorite topics is I wish I would have known more about it 25 years ago when I was actually running a construction company from an accounting standpoint. But and too many times now, as I'm helping thousands of contractors across the country, I see that and I'm able to talk to them about that, and I'm sure you all see the same thing. One quick question before I get too far in: do we have anyone in the room that actually works for a contractor? I know most of you are. Okay, so quite a few. That's good. Very good. So I'm going to call on all of you. I'm going to ask questions and try to make it interactive. So don't be shy. Don't be afraid to speak out when we get into some of the topics here. So like I said, I've been at ComputerEase for 17 years now, but prior to that, I spent 10 years working for a large mechanical contractor. Why are work in progress reports essential? So, too many times, and to some degree, I was one of those. As a contractor, it was like, well, I got to do the work in progress report because the bonding agent wants it, or the bank wants it because I'm trying to extend my line of credit, and so I have to put together a WIP report, and that's all the wrong reasons to do the work in progress. I mean, first and foremost, the work in progress report helps you run the construction company. So as working inside a construction company, I don't want to prepare that report when my outside CPA asks me for it, or when the bank asks me for it, or when the bonding agent asks me for it. I should be doing that to run my business, and then I have everything that they want. But it's one of the key, I think one of the key reports to be used in running your business as a contractor. And it's one of those rare chances that we get a chance to use that to look into the future when we talk about things like projected cost and revised cost estimates and doing whipping the job is, a lot of times we like to talk about, okay, let's go through and whip these jobs and do our forecast projections. And it's easy, and like I said, I was one of those. It's easy when you're in construction and you're in the day-to-day hectic, of running the business. It's easy to forget about that part of it. Well, I'll get to that later. But that's the key. I don't want to just report information after it's happened. And certainly, as accountants, that's a big part of, taking the numbers, adding them up, and reporting what had happened. But this is a chance we get to look forward. And, I've worked with, a lot of CPAs, across the country that specialize in construction, and it's, one of the things that, that I really enjoy doing. And I see, various degrees that, that they help their contractors. Some get very involved. Some go in and do, do data entry and do number crunching. Others go in and, because the contractor has good processes in place, uses the data and helps them and consults with them, helps them analyze the data, determine how to use that data to help their client, their construction client, move forward. If we're in the contractor's office, if you're working in that, controller, CFO position, certainly you have to put together all the numbers, but this is something that, and there has to be some good, coordination between the accounting side of the construction company and the project management side of the company. And, I go back to my days in construction, a lot of times we didn't work well together, not as well as we should have. It was an us against them, internal fighting. Well, accounting, they just want that because they want to bug me. They're harassing me to give me these numbers. Well, no, that's not why we're doing that. We're doing that because we need to be able to analyze the job and the company's progress. So there's a lot of reasons to do it, but first and foremost, the reason to have an accurate, timely work in progress report is that's what you need to run your business. I mean, it's that, to me, it's that simple, that is the most important report. I mean, if we're not managing our jobs using the work in progress, we're going to end up with bad financials. Certainly we have to have the other accounting information is important, but if we're not making any money, the rest of it's really not going to matter after a period of time. It will become irrelevant. We'll add up the bad news and add up the bad numbers and see how bad off we are. And obviously the WIP is one of the key factors. Without a good work in progress report, how can we have an accurate financial statement? And as we all know in construction, especially, I can make a financial statement look really well. If I don't get into the work in progress, don't accurately account for my over/under billings, I can have an excellent looking financial statement until the bank or the bonding company gets it and they say, well, this is, I have no faith in this. There's no supporting data to back that up. So we need the work in progress, number one, to manage our jobs, to make those jobs profitable. Number two, without the work in progress, it's impossible to have an accurate financial statement. So I think those seem like two pretty good reasons to be able to focus on that and find the time as a contractor to focus on the work in progress and work with, and it's not just an accounting function. There's obviously a lot that goes on with the project management, and there has to be a team effort between accounting and project management to get that done, to have the best work in progress report. I need to sit down as the CFO or the controller. I need to sit down with my project managers and go through those jobs, and I need to question those revised estimates when they don't look right. I mean, once again, even as you get into, there's those that don't even do the WIP unless they have to. There's those that do them, but they're not accurate because they just throw numbers out there and nobody questions them. So, I think accounting's role is to question those numbers. If all of a sudden I see a wild swing in the projected profit from a job from month to month, I need to question that. I need to look at that. And certainly the timeliness of how we do it. There's those that only do it when they have to, when the bonding company says I have to have one. That's the worst case. There's those that may do it quarterly. There's those that do it monthly. I've got contractors that do it every other week. I got some that do it weekly. So it's just a matter of how, what's going to work within the particular, construction company that you're dealing with. But, the sooner you have it, the sooner I have that information and I have that projected problem, projected loss, when I see the revised estimate is going over the original budget long before it hits the original budget, the sooner I know that, the better opportunity that I have to fix the problem. So that's, one of the real important things is how timely is that information, And there's a number of methods we can use to calculate the work in progress. If you can get it to a measurable unit, I think that's probably the most accurate method. So if I have 100 light fixtures to install and they're all the same, if I've done 50 of them, I'm 50% done with that task. So I take that 50%, how much have I spent? Well, if I've spent 80% of my budget, I have a problem. If I just look at the budget versus the estimate, or I'm sorry, the actual cost versus the estimate, I don't have a problem yet. I've only spent 80% of my budget. But if I've only done 50% of the work, the red flag's going to go up, and I'm going to say, I have a potential problem there. There's percent complete. So, I don't have a measurable unit. I'm doing the electrical work in this facility, and maybe I'm going to, as the PM, I'm going to walk the project with my superintendent. I'm going to give it an estimate. I think we're 50% done. The unit method is going to be more accurate, but I think I'm 50% done is better than just saying, well, I don't know how much money did I spend. That must be how far along I am. So that is a second way to do it. Another very good way to do it, I think, is the cost to finish. So I'm going to sit down with my project manager and I'm going to say, okay, what do we need to finish this task? I know what we've spent to date. What am I going to need? Okay, I need 10 men for the next 2 weeks. I've got, $5,000 worth of miscellaneous material that I haven't ordered already that I need to purchase. And I come up with a cost to finish. So my cost to date plus the cost to finish is my revised estimate. And we'll look at some examples of, how that all flows into the work in progress report here in a minute. But, any of those three methods work, and they're all better than just comparing the actual cost to the estimated cost. Because, and I'll ask this for those in construction, how many of you have ever done a job for exactly what you budgeted it for? I mean, my guess would be that it's never happened. I mean, I know it's never happened for me. So the worst method is to say, I've got a $100,000 budget, I've spent $50,000, so I must be 50% done because I'm going to spend $50,000 to finish. The odds, and we can talk about odds because we're in Las Vegas, right? So the odds that you're going to finish that job are exactly $100,000. They're astronomical. It won't happen. So, that's the worst method is to take, and then to use that to do your WIP calculation. If I do my over-under billing based on that, assuming I'm going to finish that job at $100,000, I'm not going to have an accurate report. So, how detailed am I getting with this? Am I doing it? Certainly, I want to do it, I want to get an overall company-wide picture, company-wide work in progress report. I want to get a job-by-job work in progress report. And then within the job, I want to get down to, what level of detail. Am I going to have one activity, one task within the job? Do I have 100 tasks? Do I have 1,000 tasks? And it's, you need to be able to track costs. I always tell people, when they say, well, how detailed should I get in my job costs? And obviously that, later on, works into the work in progress. Well, how detailed can you get the information? I mean, if I have 100 task codes, but it's not possible that they're ever going to break down the cost in the field to 100 different activities, what is the point in the 100 activities? I'm going to end up with one activity that's way over budget and 10 others that are way under budget because no one's allocating their costs properly. So there has to be some, and I have some that have hundreds of cost codes and they do an excellent job of managing those. I have some that have hundreds of cost codes and they have all the cost in 2 of them, and there's 98 of them, 98 other cost codes that don't have any cost, but they all have a budget. Well, really hard to analyze then the projected cost on any of those activities. So you want to do that, and then the same that goes when you sit down to go through your one of those 3 work in progress methods. Well, once again, am I doing it in 2 categories or 100 categories, and how detailed am I going to get in that information? So it's there's a fine line between I'd like to have a lot of detail, so I'm going to do it, but I can't get it, and you need to think about that. Your work, those that are working with your clients, you need to hopefully educate your clients and explain the importance of that's great. You think you want to break down your cost into 100 different activities, but realistically can you do that? And the answer typically is going to be no. I want more detail than it's realistic to get, so the detail is going to be meaningless. So there's some like what we like to call the deadly job cost mistakes, and mistakes that I see time and time again. I'm sure all of you see those of you that work with multiple construction clients. You have the best of breed. You have the people that are at the other end of the spectrum, and you see all there's all kinds of problems and mistakes that we want them to avoid. I think the worst mistake is I'm doing a work in progress, but I'm just using the actual to the estimated cost. I'm not using one of the 3 methods we talked about. I'm assuming if I have a $100,000 budget and I spent $50,000, I am 50% complete. And that, I will, say with, 99.99 or 100% of the time, that will not be correct. So that is, the worst way to do that. And I always like to, I give 2 examples. I've got 2 jobs, 2 different project managers, and they both have a $100,000 budget. And they both have spent $50,000. I'm looking at a cost report, and I say, okay, I sit down with PM number 1, and I say, how are we doing on the job? He says, we're doing fine. I've only spent half of my budget. Okay, well, but he left out some information. But he in his mind, he says, I'm doing fine. I've only spent 50 of the 100. I've got 50,000 left to go. So, there's no red flags going off yet because, he hasn't gone over the budget. Now, I go to project manager 2, and we sit down and review his job, and he says, yeah, I've spent 50% of the budget, but I've only done 40% of the work. Uh-oh. I mean, on paper, those 2 jobs, if I look at a job cost report, they look identical. Budget of 100, actual 50 remaining. Now, on paper, they look identical. But in reality, there's a huge difference because I got one more important piece of information. He told me, and however he told me, in this case he told me 40%, or if there had been 100 units and he's only installed 40 of them, it would have calculated the 40% for me. But now I know that he's only 40% done. Well, at this rate, if it's going to cost him $50,000 to do each 40% of the job, there's going to be another $75,000 in cost coming. His job is now projected to be $25,000 over budget. Keep in mind, on paper, they still look the same. On paper, they're both $50,000 under budget. But because of that one additional piece of information, I know that second job is going to be $25,000 over budget long before it gets over budget. Now I got a time to sit down and get with him and say, okay, what's going on? What's the problem? We have a chance to fix it. Maybe we won't fix it all. Maybe we won't save it all. But in the first example with PM number 1, once we get to $125,000, there's no chance we're going to save it. We're going to fix it. At least I have a chance on the second one to correct the problem. And it was just one additional piece of information. I mean, the accounting numbers are all there. They're all the same. $100,000 budget, $50,000 spent to date, $50,000 remaining. But you've got to get one more piece of information. One more piece of information is unbelievably critical, and it does all kinds of things for me as a contractor. If I got that one additional piece of information, well, how much work have you done for that $50,000? Or how much do you need to finish? Either way, how much have you done, or how much do you have yet left to do? You get to the same answer. But we can't wait until we get there. We have to be able to look forward. And it's great that we can look in the rearview mirror and see what happened after it happened, but we can't fix it. But now we can see out in the future, man, we're projected to be $25,000 over budget, lose $25,000 of our profit. And that could have been a job, that could have been one activity of many on a job, but you want to get down, but I know that activity is projected to be $25,000 over budget. And the other thing too, you get into a job and maybe it has 10 activities, and one of them's going to save $25,000, and that one's going to lose $25,000. So what gets lost at the end of the job is this job came in on budget. Hooray, everything's great. We think everything's good. But wouldn't it have been nice to know that one activity on that job was projected to lose $25,000? So if we're only looking at the whole, sometimes we miss some of the details. So, we talked about the three ways to do it other than the cost to cost. So, here's a sample work in progress of that, example that we were talking about. So I have the $100,000 job. I've got $50,000 worth of cost to date. So project manager number 1, this is his report. It says we got $50,000 to finish because we're just taking the remaining cost from the budget. And, we've billed half of the contract, so we're over under billing. We think we're 50% done, so we're not over or under billed. We've billed 50% of the contract. Everything's good. But the second PM who told me we're 40% done, look at what that does to the work in progress report. I mean, that's a huge difference. Just looking at a job cost report, these two jobs looked identical. They both had a contract of the same, a budget of the same, and cost to date of the same, billings to date of the same. But the work in progress says this job is now projected to make no profit. We've given away that $25,000 estimated profit. We're now overbilled $12,500. What does that do? That affects our financial statement. And that's, it's a very simple example, but that one example, and you look at the difference in the work in progress report, a huge difference in knowing this information. And, so we need to have, without that work in progress, that projected cost, we're not going to have an accurate picture of where the job stands. The estimates need to be detailed and accurate. We kind of talked about that. Being detailed is one thing. The cost is only going to be accurate based on the level of detail. And, estimating is a very detailed, task. And just because there's 1,000 lines of detail in the estimate doesn't mean there needs to be 1,000 lines of detail in the job cost. I need to be able to consolidate certain activities to get it, if in the field they're only going to be able to report at this level, at a level, maybe that's a group of 10 or 15 of those activities. Well, I need to roll those up when I get to job costing so that I can get the data to accurately track that and report back to estimating. And the constant revision of the work in progress. And we talked about how often we're going to do that. Whether it's weekly, biweekly, monthly, quarterly, annually, and obviously the shorter the time frame, the better. So. And the most important, what we do is we know the status of the job before it's too late. I mean, we have no chance once we've spent the money to make any corrections. We can learn from it. I mean, it is certainly valuable. If you come after the job's over and say we blew this, we went $25,000 over budget. Yes, we can use that to learn for the next job, and that's important. I'm not even sure. Sometimes we don't even do that, but but we can use it going forward, but it didn't help us with that job. If we look at it before we get there, if you tell me today that I'm going to be at $125,000 and I'm going to be over budget, I can use it to manage this job. And certainly then I'll also use it to manage the future job. So, a couple other examples here. So this would be an example using the unit method. So if I'm using units, in this example, I've got, if you look at the second line down there, I've completed 600 of 1,000 units. So that's 60% of the work. It's a simple calculation to take the cost to date for 60%. What's it going to cost to do the remaining 40? Now, certainly there are variables to that. So, I don't want to, it's not an exact science because maybe the first 60% of the units were harder or easier to do than the next 40. But, you can do overriding calculations to do that. But as a minimum, let's assume that our production rate is going to be the same. So to do the next 400 units is going to cost us proportionally the same that it did for this first 600. This example, I've got 3 line items. One of them is trending very well. We're projected to be under budget, $1,600 and some change. The other item, where we're 20% done, we're projected to be $2,500 over budget. Well, I could look at the job as a whole, and I'd see I'm going to be $800 over budget, but I really want to focus on the one item that's going to be over budget, the $2,500, because it's great that I'm going to save on the one, but let's see if I can fix the other one. So this is, now we're getting into another level of detail to see, where we can do that. Yeah, no, that's a really good, I like that idea. I don't know that I've ever seen that. Yeah, and that's good. And I'm going to repeat the question just for those that are online. I was asked to repeat the question. The question was, have we ever seen incentives for project managers to report the information timely as opposed to the profitability of the job? And and I have not seen that. I think it's a great idea because I would rather reward them to give me the bad news in time to correct it because I'm going to save hopefully some of that loss. I'm more than willing to incentivize them based on that, as opposed to the overall profit. So I have not seen that, but I'm going to, I talk to a lot of contractors. I'm going to start throwing that idea out there. I think it's an excellent thought, and it is that important. I mean, as a contractor, I'd be willing to pay for that information. I would pay for the honesty and the timeliness of the information because it's that important to know that. At $25,000, if I get a chance, maybe I can save 10 of that 25. Maybe there is a problem, but if I can pick up 10 of the 25, I'd be willing to share a portion of that 10, to get that information. I'd like to think we wouldn't have to, give them an incentive to do that, but the reality is, maybe we do, because, like I said, people do not want to share bad information. Yes, sir. But do you think he knows to the level of detail, like where? He knows the cash flow. The cash flow, while obviously probably, if not the most important, certainly one of the most important things, but sometimes to me, I think the cash flow can be misleading because, I've overbilled the job, I've got cash coming in, but I'm going to get to the end of the job and I've got a lot of work to do and I've got nothing left to bill. So I agree. And I think, the smaller contractors. But I guess my question there would be, you say the owner knows that. Does anybody else know that information off the top of their head? And what happens when that information just is carried around in somebody's head and nobody else has access to it? That, could be a future recipe for disaster when all of a sudden the owner who, and you see that, and I think that's probably, why a lot of this happens. It starts, the small contractor, and the owner knows everything. The owner knows he's got his thumb on the heartbeat of the business, and he knows everything about every job and how they're doing. And I, the contractor that I work for, we were a relatively small mechanical contractor when I started there. I was quite a bit younger back then, but we were doing about $5 million a year. When I left there 10 years later, we were doing $80 million a year. And when I started there, absolutely, the owner, the gentleman that kind of mentored me and brought me up through and taught me a lot of things that I learned, he knew everything about that business. 10 years later, when we were doing $80 million a year, there's no way he had, he did not have the same control of that. And sometimes it can spiral out of control, doing, I don't want to do twice as much work to make the same amount of money. So, we need to be able to look at that. So I do agree that the smaller contractor certainly could do that, but the thing is, going forward, if we if we put a process in place, a program in place, then everybody will know that information. And I want, and part of the key there is to share the information that we need to do this. I still talk to a lot of contractors today. They say, well, I don't want my project managers or my superintendent, I'm not going to share any job cost information with them. I said, well, how can they run the job if they don't know what they're supposed to do? I mean, if they don't know the score, I always like to refer to job cost as keeping score. If I don't know the score of the game, I don't know what to do. I don't know, am I supposed to hold the ball? Am I supposed to move forward? Am I supposed to, am I behind? Am I ahead? You have to know the score. And I still talk to people today, and they'll tell me, well, if I tell them the budget, they'll use the budget. I said, well, if you don't tell them the budget, how are they going to know how you going to keep them going over the budget? But but it's just there's different schools of thought out there. But I think I'm a big believer in sharing the job cost information, and you can do. You get into, certainly you're not going to share all of the company financial information, the private information that you don't want to share with those people, but give the people in the field the tools to do their job, and give them, the incentives are certainly a good way to, you incentivize them to come in under budget, but give them the information. And the information has to be real time. I don't want to give them job cost information that's 3 weeks old, 2 weeks old, even a week old. I want them to know today where that job stands, and I want to be able to share that information with them so that I can get that information back from them. So it's an important thing, but I still see it a lot today. Not as much, but still see people that I don't want to share the job cost information. I don't want them to know what people make. Well, you can solve that. I mean, I'm starting to see a trend where a lot of people use what we'll call a trade rate. I'm going to charge every superintendent gets charged to the job at $70 an hour. So that way we're not, you don't know that I make more than you or you make more than me. So there's ways around that. There's certainly ways that you can set that up and use a standard rate of labor costs, because that's typically what you're afraid of sharing, is I don't want them to know what everybody else makes. So there's ways around that, but don't hide the information from them, and don't and you still, like I said, don't see it as much today, but I still go in and I'll go in and meet with a client. We'll talk about job cost, and they'll say, well, I get the job cost, a week after payroll is done, I can go to John, or I can go to Mary, and I'll ask them to give me a job cost report. That's that's okay, but I'd rather give them the tools, give them access to the information, give them real-time access to the information. Certainly control it. Don't give them things that they shouldn't have access to, but let them see where they're at. So this is the WIP based on that. Actually, let me go back one. So the percent complete is to me it's the subledger of the work in progress report. So when I look at the WIP report on this job here, and I see my revised estimate is $29,583, where did that come from? Well, it came from my calculation over here, my estimated cost, my cost to date, my calculated projected cost to finish based on the units complete, and now this is the detail of the work in progress report. So there's two levels. Just you have the general ledger, you have the subsidiary ledgers, the AR, the AP that tie to the general ledger. You have a percent complete schedule that ties to the overall WIP schedule. So once again, important that we have that information, and important that we get it down to this level of detail. So through all this, obviously one of the things that's going to happen, what I say is mistake number 3 is, and this is certainly we're come in, as an accountant, we come in at the end of the year and we look and now we have to work on the revenue recognition. Well, we need to properly recognize revenue based on that over-under billing, and we can't get an accurate over-under billing without an accurate work in progress report. So they all tie together. And this is all the mistakes we've talked about is this is kind of a common thread. They all lead to an inaccurate revenue recognition. And and if we're using the cost to cost method, like I said, they're always going to be wrong. We can I can give you a financial statement and a work in progress, and I'm just going off the actual versus the estimate. I can make it look really good. I've billed half the contract, but I've only done 25% of the work. Looks like I'm making money, but the reality is I'm not. So we need that needs to be accurate, and it needs to be real time. And as a contractor, I want to have that information now. And I had a meeting the other day with a CPA partner of ours, and we went out to meet with one of his clients, and they were smaller contractor but starting to grow. and and he was helping them do a lot of number crunching and doing a lot of data entry type work and putting the numbers together. And we went in and we talked about putting a new system in place and putting a process in place. And they looked and they kind of looked at me and they said, "Well, what's Chris going to do? Are you telling me we're going to save on his accounting fees?" I said, "No." I said, "What you're going to do is you're going to use him to consult with you to help you grow your business, not to help you crunch numbers." And they said, "Well, that makes a lot more sense. There's a lot more value." So now we're talking about the outside accountant that comes in, and the contractor, I truly believe, would rather pay you to consult with them to help them do tax planning and review these kind of information rather than put it together. So if you already have it for them, now they can come in and they can work with you. And I've got a lot of CPAs that I work with, and they'll go in and they're not their bookkeeper anymore. They fired themselves as their client's bookkeeper, and they became that high-level consultant that's helping them analyze their business and helping them run their business and move forward. And it was just amazing. The contractor's eyes lit up in this meeting the other day, and he said, "Well, that makes a lot more sense. I'm gonna." He was kind of laughing, and they were kind of joking around, the CPA, and he says, "I'm going to feel much better about paying you to do that than I am to pay you to be my bookkeeper." And so if we get the right process in place, and a lot of times you have to help them set that up first, and especially now we're talking about maybe a smaller contractor that you're working with. I need to help them get the right process in place, and essentially, I was talking to somebody yesterday, and they said, "Yeah, I want to fire myself as the bookkeeper. I want to work myself out of that job and into another role with my client." And a lot of times I'll talk to some CPAs, don't believe that. They don't want it. They're afraid to lose that bookkeeping income, that billable bookkeeping revenue. And I say, no, you'll be much more valuable to your client if you're not doing their bookkeeping, but if you're helping them run and grow their business. There's tremendous value to those services as opposed to being the bookkeeper. And you also differentiate yourself then from other CPAs that may try to come in and work with your client, or everybody's always looking for new business. Well, if you're bringing me this kind of value, that's a lot more valuable than the person coming in and doing my tax work and doing my doing my audits and my reviews. All those things are great, and those have to be done too. But this kind of consulting with your client, there's the tremendous value add to that that they're going to see the value in, and you're going to become irreplaceable. They're not going to ever look somewhere else because they see the value in what you're doing. I mean, they can always look elsewhere and shop prices for audits, reviews, and tax work. I mean, that's I'm not that's very important too. I'm not downplaying that, but this is so important and different because not everybody's doing it. Not everybody's thinking that way. They're too many times we're thinking about adding up the numbers and doing the number crunching and being the bookkeeper and doing the tax work. Let's help them and let's help them manage and run their business. So, a couple of the reports, and we've kind of looked at these already, but there's just different examples of the work in progress report and the revenue recognition. In this example here, I mean, that underbilling, that needs to be noted on that job. So based on the projected cost, I now know that I'm $21,000 underbilled, and that's obviously a big problem. So, but without that accurate percent complete, I won't know that information. Same thing here, another example where we're underbilled. Now on this one, but now I go to an overbilling situation. So you can see that number is critical, and it needs to be real time because I need to have and once again I tell our contractors that I work with, I says and the same thing with our CPA partners is have your CPA come in and review that financial information with you, but you've got all the data to make your own over/under billing adjustment each month. You can get an accurate monthly financial statement. You don't have to wait for your CPA to come in and prepare it. You want to sit down and review it with your CPA, and certainly there may be adjustments and things they want to do, but give them some information to work with already and don't have them start from scratch. Because if they got to go put it all together, once again, now they're spending all their time and resources crunching numbers rather than analyzing the numbers. And that's what, the real strong CPAs that I work with, I see with our clients, I mean, they just rave about the value added they bring when they can take this information and use that to help them, and you become such a valuable, asset to them. This is, probably, my favorite report, and this, actually, one of the CPA partners that we work with, we were talking one day, and we had all these work in progress reports, and we talked about and we used. He said, well, we just need a simple report. We talked about tracking those projections. Well, I want to know the fade or gain from one month to the next. So now, I do my projections. I know which jobs, based on this month's projections, or weekly or biweekly or however often we're doing them, and I know which jobs have a gain or fade in the estimated cost, fade or gain in the estimated profit. So I look at my entire job schedule. What's the first job I want to look at? I want to look at my projections for job number 1, because between last month and this month, the projected profit has gone down $25,000. Maybe that's true. Maybe we got a bad projected number. Once again, just because we're now doing projections, we can't necessarily trust the numbers, because, we were talking before, they could give us inaccurate numbers and we want the truth. But I'm going to sit down and I'm going to review that first job. That's the one I'm going to look at first, because I want to know where we're at. How did we get there? What happened between last month and this month that you're telling me we're going to lose $25,000 compared to where we were at last month? That's where and the quicker I know that, the quicker I can sit down and review that, the better chance I have. Yes? Yeah. No. The reports I'm using as an example here today are all standard reports in our system. But they, and I always tell people, because I do a lot of presentations like this, and I'm not in any way saying but I am obviously from a software company, so we do have a product that does this. But I tell people, I don't care if you're doing a yellow legal pad, you need to have these reports. You can do it in Excel, but there are a lot of good tools out there. Not just our product. There are a lot of products in the market that have these reports already built into them. And you just need to take advantage of those. So, I say there are a lot. There are some. There are some standard accounting packages that are not specifically for construction. I won't mention any names, but we probably know what products those are. But they don't have reports like this built in, because they're not construction specific applications. So, so typically then you're doing it in Excel, and every step you go outside of your system, the more you have to redo the data entry, you run the risk of it not being accurate. And then certainly the final goal is when we have a total company-wide work in progress schedule that shows all the jobs we've been talking about here today. And I've got my over and under billing. Some are overbilled, some are underbilled, but now I've got my information I need. I know my projected cost, my projected profit. I know what adjustments I need to make for the month end financial statements. So now I can get an accurate WIP. I can recognize my over under billings on the move those to the balance sheet. And have now an accurate financial statement, an accurate balance sheet, and with once again with the right tool, and if you help the contractor put the right process in place, it's real simple. They can do this monthly. They can go in. They've done the projections. They've got an accurate work in progress schedule. They go in. It's a very simple reversing journal entry to recognize the over under billings, move them from the income statement to the balance sheet. Next month I'm doing it again, and I can go in now. If you're the outside CPA, you come in, you review that, you look at it, but you have something to start with. You don't have to say, okay, let's gather all the information. You already have the information. Now you can sit down and review it with them and work through that.